What's going on, guys? This is Aaron from Departures Capital, and we're here with Joseph Nakhla, CEO of Tribe Property Technologies, along with Angelo Bartolini, CFO of Tribe Property Technologies. It's a pleasure to have you both on today. How are you guys doing?
We're doing
Great.
great.
Thank
Thanks
you.
for inviting us.
Yes, so we do one of these quite often, Joseph, and it's a pleasure to have you back on. But this is our first time, Angelo. So welcome to the channel. Welcome to the company, because you are new here. And what has Tribe been up to since we last spoke? I'll let Joseph take the lead on this one, and then we're going to be talking to Angelo very shortly.
Very good. Yeah, we've been busy. Obviously, nothing, no bigger news than the fact that Angelo had joined our team as a CFO. For those that have been following us, know that Jim Defer, our ex-CFO, did an amazing job helping us go public with the couple of rounds that we did, the RTO round and the growth round that we did afterwards. And he was instrumental to getting the company where it is now with the M&A activities that we have done. And he'd always promised me to give me 2 to 3 solid years, and that's the sweet spot of what he likes to do in terms of helping small companies get on their feet. And as the company grew, and we have a significant amount of further growth ahead of us, it's no surprise to those that follow us that we continue to grow year over year. It was time for us to bring in somebody of the caliber of Angelo that can come in and has taken his previous company from much smaller size to the multi-billion-dollar market cap that it was, which was Altus Group, another public company and a great prop tech company, Canadian company that does operations internationally. So he knew quite a bit about the journey we're embarking on, and I needed that type of a partner to come in and help lead the company towards that growth. And he was kind enough to get back on the roller coaster, as he says, and come and join us on this journey.
So Angelo, you come from a very high pedigree, and we're with Altus Group, as Joseph just mentioned, which carries a multi-billion-dollar valuation. Now you're with Tribe. What did you see in the company that attracted you to them?
So I left Altus Group at the end of 22, and I left feeling great about the accomplishments of both what I was able to contribute and Altus Group during my 15-year tenure there. And we grew the size of the company tenfold, and I loved that journey. When I joined, it was an early stage, young, very entrepreneurial company with this tremendous growth opportunity ahead of it. It was just Canadian only, services only, and we transformed that business during the time I was there to a global technology led and services company. And when I left Altus Group and I started thinking about the next chapter, I just wanted to do it all over again. I mean, it was such a great ride. It's just like a kid at an amusement park who gets off the ride and just wants to jump on it all over again. I was thrilled when I met Joseph and he discussed the Tribe business and its opportunity. And I took some time to research it and validated everything he was saying. And moreover, my next chapter was going to be with a leader, someone that I thoroughly trusted and would enjoy working with. And Joseph fit that bill immensely. I am so thrilled to join Joseph and the entire Tribe management team. I see the opportunity, as I said, it is tremendous, and I am looking forward to contributing to that journey. And that's pretty much it. That's the reason I'm here today.
That's wonderful, and I can confirm Joseph's a great guy to work with. So let's talk about some very exciting news now for the company. So Tribe recently announced an acquisition facility of up to $15 million to further expand its M&A activities with Canadian Schedule A Bank. Can you tell us more about this and why it's so significant, Joseph?
Yeah. So for those that don't know what a Canadian Schedule A bank means, it's us in Canada here. We only have really five large banks. So our debt facility it's an M&A debt facility that we secured is done with one of those big five banks. So it's not venture debt. It's really very specific to usually large companies that can secure those types of relationships, and it's only just a sentiment to the quality of the execution we've been able to do in terms of how we buy companies, as well as the opportunity ahead of us. And really the intent there was as follows. We've done 12 transactions to date, and they've all been accretive. As we work our way up, and we are a national company now, we're one of the biggest. There's only 3 national players in the whole space, and the other 2 are multi-billion-dollar organizations. So we're the little engine that could. We tend to be, needless to say, the fastest growing. We needed more muscle to go out there and be able to secure as we work our way towards bigger assets, and we needed some more capital. And frankly, when you have access to senior debt with the big banks looking at your business model and going, "This works, we'll get behind it." It was something we've been working on for a while, and all it really means is just we've got bigger purse for Angelo and myself to do deals.
So as we look into the later part of this year, do you have any big plans for the company, and what are you looking to accomplish now, especially that we have this new facility?
Yeah, we definitely have bigger plans. We've been very active. We obviously made an acquisition in the GTA market that we announced last quarter, or at the end of last quarter, and that's going really well. We also have other targets that we're executing on, and in terms of bringing them closer. I just do remind our viewers that we don't announce MOUs. We only announce definitive agreements. So the fact that there's no announcement doesn't mean things aren't being worked on. But I think what you're gonna see us do by the end of this year is just really continue to improve our gross margin, bring some of those deals over the line, which we're very, very excited about, to kind of really give us that scale. That now that we've got the platform on a national level, it's time now to leverage that by bringing in further scale through the door, and that comes through bigger acquisitions. So we'll continue to be very active on that, but it's no surprise, and Angelo may even touch on that a little bit later, that we're laser focused on getting the company to profitability as well next year.
Great. So, in terms of the pipeline, how does it look for onboarding new buildings and for new construction wins?
Yeah, our organic business continues to be very strong, and that's just a testament to the service delivery model and our staff and our team. I've spoken in the last year and a half about how difficult it was for real estate developers to complete their projects due to COVID and to supply chain issues, and even some of the cities not being even able to give these developers a occupancy permit. So the buildings are built, but people can't move into them. And I did give the indication that 23 was going to be the year where that valve is going to release, and it has been. It has been a great year. A lot of new construction is coming through the door. If anything, we probably can't onboard those buildings fast enough, to be honest, because for those viewers of ours that don't know, we digitize those buildings. Every aspect of that building and all the workflows have to get on our platforms. It's quite a bit of heavy lifting up front to digitize a whole community with all its complexities. But we're doing a great job. The organic business is going really well, and thankfully the M&A side is also very active.
Great to hear. So can you give us an update on your business initiatives in the GTA? I know you're focused on that area, so yeah, let's hear it.
Yeah, so we announced Meritus Group acquisition. That's going really well. We're working through all the different logistics and the regulations required for us to kind of quote unquote land a plane in that market heavily. The idea there is we work with a lot of real estate developers in the GTA market, and they've always asked us to be able to manage for them in that market, and we just didn't have the boots on the grounds or the licensing, and now we do. So that's going really well. Look for us to be even more aggressive in that market. We really like it. We love the density. We think the GTA overall is still one of the, as you may know, it's one of the top 10 markets in condos in North America, which says something. That's not easy to do. So you'll see us double down on that market. We'll continue to grow there.
Definitely. So Angelo, when it comes to 2024, what's Tribe focused on, and how does the company plan to create shareholder value from here?
Absolutely. It's exciting times. I really see us pivoting to profitability in 2024. And that's going to be achieved through a combination of strong organic growth. We've got, Joseph's mentioned, there's a strong pipeline of just new development coming on stream. So we look forward to that, to onboarding those new properties. And moreover, we've got a very healthy M&A pipeline, and you can achieve pretty spectacular growth, pretty material growth in very short period of time when you've got the ability to do that M&A. And we've got additional financing in place, as Joseph's talked about. We've got a strong management team that is ready to, you've got to go through due diligence. We've got the background to do that, and we've got the resources to do that, and then the resources to close those acquisitions and onboard them in a very short period of time. And so that's going to add to our top line. And then we're going to continue to drive that efficiencies in the business. One of the things that's very high on the list for me to do in short order, and achieve the synergies with the acquisitions and continue to drive sort of back office workflows, if you will. And that all results in higher margins and higher EBITDA and higher margins. And all of those components together will drive shareholder value. The market's been a little tough on everybody these days, but as it stabilizes and as we perform, we should be recognized through higher share prices.
Exciting times ahead. I look forward to covering it. So why is now the best time for a prospective shareholder or investor to take a look at the company today?
I mean, look, it's no surprise. We've signaled to the street we're probably going to do about $20 million in revenue this year, somewhere in that neighborhood. And a company like that to be trading at $16-17 million market cap in with the wind of growth that we've experienced. We're a fast 50 company. We're one of the fastest 50 growing Canadian companies, and that's over 5 years. So needless to say, it's an incredibly undervalued story. I mean, we're in the market buying. We're very active in terms of when we're not blacked out, and we love our company. We love the growth story. I have enough grays, and I guess so does Angelo, I guess, to remember my previous company. We were trading at 15 cents, and the volume was so low. And then when we sold the business at 350, 360, when the business got sold to PayPal, everybody thought, oh yeah, we knew all along this company is amazing. And you can create shareholder value by just being steady, keeping your head down. No, you don't knee jerk. You just keep building, and based on the fundamentals of the business. And I really genuinely believe we're an amazing steal. There's a lot of people in the market that think we're an amazing steal, and that will take care of itself, especially when you turn the corner around profitability. We're not very far.
Definitely. Well, 2024 is looking like an exciting year. I look forward to it as well. So thank you both for all the information. Welcome, Angelo, and best of luck with everything. I'm sure we'll have you both back on.
Thank you, Aaron.
Look forward to that. Thank you. Bye-bye.
If you like these videos, kindly hit that subscribe button and the bell for notifications. Drop us a comment down below. We'd love to hear from you. And finally, always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell stock because you heard it on here. Buy or sell stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. Furthermore, this video may or may not have been sponsored by the companies that we've profiled within this video, and we may or may not own shares of any of the profiled companies in this video. If you want to know the full disclosure details, check the description down below, along with thoroughly reading our disclaimer. Thanks so much for watching, guys, and I look forward to seeing you in our next video.